How's it going, everyone? It is Andre Williams, and you know what time it is. It is time for the joke of the day. You probably had a long and stressful day. Hey, today's Friday though, but you came here to watch one of my videos and hear some of my corny jokes. All right, so here it comes. What do you call a polar bear in the jungle? Lost. I don't know. But anyways, so what we're going to be talking about today are the two penny stocks that analysts are rating a strong buy with tremendous upside. It's an article that I was looking over, but what's very ironic is that I actually own one of these stocks. So I was like, you know what? These two stocks don't look that bad, and I do see the upside in them as well. So that's what I'm going to be sharing with you guys by doing a technical analysis on both of these stocks and also going through the article with you. So we're going to go over this article quickly. As you can see on NASDAQ.com, these two penny stocks are well positioned for gains. The reason why I wanted to share this with you guys is because I actually own one of these penny stocks, and looking at the both of them, I'm definitely going to be building up my position even further, just considering how the market conditions have been, and a lot of stocks that we're seeing right now are on sale. So let's go over it quickly. The stock markets have been on a roller coaster ride in recent sessions. However, while volatility is ruling for now, some market watchers see a rising trend on the near horizon. Setting the tone for this bullish outlook is Credit Suisse strategist Jonathan Golub, who raised his S&P 500 outlook twice in the last 2 months. Back in January, Golub predicted that the index would hit 4,200 by the end of this year. He has now upgraded the target to 4,300, which implies an upside of 11%. Taking this outlook into consideration, we set out to find exciting opportunities that won't break the bank, namely penny stocks. These stocks priced at $5 or less offer investors some of the highest growth potential available in the market. There is risk here too, as these pennies are often priced low for a reason, so do your due diligence is essential. So using TipRank's database, we pinpointed two compelling penny stocks as determined by Wall Street pros. Each has earned a strong buy consensus rating from the analyst community and brings massive growth prospects to the table. We're talking about triple-digit upside potential here. So the first one being Aptose Biosciences, which I actually hold a position in, so let's get into it. We'll start with Aptose Biosciences, a clinical stage biopharma company with a focus on women's health. The company is working to develop and commercialize a series of therapeutics to improve the treatment options available to women in the areas of contraception, fertility, and sexual and vaginal health. Aptose has a large and active pipeline program. With 9 drug candidates in various stages of the development process, 9 drug candidates, the leading drug candidate, Aptose BV1 or cyclamicin, is an antibiotic gel ointment for the treatment of bacterial vaginosis, the most common form of vaginal infection. So we know there's a market there. In December, the company announced positive top-line results from the phase 3 trial, with patients taking Aptose BV1 showing upwards of 70% clinical cure rate by the end of the study, which is pretty good. Aptose's second leading candidate, Ovaprene, is a self-administered, hormone-free monthly female contraceptive. Ovaprene is currently in its pivotal trial and is expected to show top-line data in 2022. Other drugs in the company's pipeline are under study as hormone replacement therapy and for the treatment of vulvar and vaginal atrophy. Thanks to its promising pipeline, several members of the street are pounding the table on this name, which trades for $1.80 per share. Again, this is from when the article is. The company's research program has caught the eye of 5-star analyst Zegbeh Jallah from Roth Capital, who has made the stock one of the firm's top picks. With multiple catalysts expected in 2021 and with our overall positive outlook on the women's health category, there is another of our top SMICR, so Cisco cap picks for 2021. This microcap company is in a strong position to also see a doubling or more of its stock over the next 6 to 12 months. So that gives you a little bit of a ballpark figure of how long you're going to be waiting, but at the same time, the upside can be huge. The analyst added that Dare announced that its phase 3 top-line data of Dare BV01 met its primary endpoint. The reported cure rate was also superior to the most commonly used treatment for BV, which is metronidazole, which is 70% versus 64%. These results increase the probability of success for Dare BV1's approval by year 2021. as well as the potential for a highly lucrative commercial partnership. Again, another thing to take into consideration, it shows compared to the competition that is performing very, very well. To this end, Jala rates Dare shares a buy, and his $9 price target implies an eye-popping upside potential of 400% by the end of this year. What does the rest of the street think? It turns out that they are wholeheartedly agree with Jala. With 3 buy ratings and no holds or sells, the message is clear. Dare is a strong buy if that wasn't enough. The $7.17 average price target puts the upside potential at 298%. Now let's get into the second one. This one I don't have a position in, but I'm definitely going to be looking forward to it. So let's get into it. So Aptose Biosciences. Next up is Aptose, a clinical stage biopharma company focused on unmet clinical needs in the treatment of chronic lymphocytic leukemia, non-Hodgkin's lymphoma, acute myeloid leukemia, and also myelodysplastic syndrome. In short, Aptose is working to improve the efficacy of treatments for hematologic malignancies. The company's leading candidates, CG806 and APTO253, are both in early phase trials. CG806 is the subject of 2 separate trials and studies for the treatment of B-cell tumors and myeloid tumors. The phase 1AB study is expected to show early results by mid-21, so that's this year. So the APTO253, which is in phase 1B trial for the treatment of the AML and MDS, is expected to show early results by mid-21 as well. So these are things to look out for this year. In December of last year, early data on the CG806, right, for the treatment of CLL and NHL, the B-cell tumor study was less conclusive than it had been hoped. While several patients showed a reduction in tumor size, there were no objective responses. In addition, 2 out of the 3 patients reported adverse effects and stopped the treatment early. Although there is no reason at the present to suspect the adverse effects were caused by CG806, the result was less clinical evidence that had been hoped for at its early stage and a likely prolongation of the early trial period. 5-star analyst Sumut Roy of Jones Trading looks at Apto's CG806 study as a major net positive for the company and believes the current low price is a buying opportunity. Aptose is at the cusp of identifying the go-forward dose in RR-CLL and RR-AML. CLL trial is currently going through the dose escalation phase, and multiple biological readouts like PK and PD dose dependent on lymphocytosis and biochemical detection of inhibition of the BTK FLT3 signaling indicates 600 to 750 to 900 milligrams of BID dosing will be RP2D. We believe that year 21 update would be a key driver for Aptose as the registration path becomes clearer, Roy noted. Turning to the drug's potential, Roy adds, with potential market launch in 2024, 30% peak market penetration in 5 years, and 45% probability of success, we estimate an adjusted peak sales of approximately $620 million in 2030. Roy backs up his optimistic comments with a buy rating and a $14 price target that suggests an impressive 1-year upside of 255%. Even though this stock saw a collapse in December, Wall Street is still taking an upbeat view. This can be seen by the 5 recent buy reviews making a unanimous strong buy analyst consensus rating. Aptose shares are trading for $4.04, and their $11.20 average price target implies an upside of 193% in the next 12 months. Again, this is looking really, really good. So I wanted to show you guys quickly Fintel.io. I love using this to see what the institutions, where the big money's buying on those 2 penny stocks that we just covered. All right. So for Dare, we're going to be taking a look. As you can see here, we have some very notable asset firms in here. You can see Vanguard. We have the Hudson Bay Capital Management. We also got to take a look at the fact that, you know what, we also have Venrock Partners, pretty well known as well, Polaris. But let's go down further to what we really want to see in regards to, has there been any recent buys. So green rows indicate new positions and red rows indicate closed positions. So even if we just take a look at the month of February, we have a lot more new positions that have been opened and only having one red in regards to Raymond James and Associate that had a closed position. So by the look of it, let's go even further back. So back in November, closed position by E-Trade Capital Management. So far you can see the institutions are very bullish in regards to DARE by looking at this. We can see there's a lot of notable names on here as well. Like we noticed before, we have Vanguard, we have Virtue Financial, which we've also seen many times here. We've also seen Citadel. We also see Goldman Sachs Group. Again, Vanguard over here as well. And like I said, just for this year alone of 2021, it's very, very impressive the amount of institutions that are involved and also the new positions that have been made. And there's so few closed positions that we actually see for this year, which it only is one. So very, very good to see. So we're now on fintel.io for APTO, Aptose Biosciences, which is one of the penny stocks that we just covered. So we want to see where the big money's at, see what the firms, institutions are doing. So as you can see right here, these are the ones that have a good amount of shares and so forth, as you can see into the millions and so forth. And also what we need to take a look at are the green rows indicate new positions and the red rows indicate closed positions. So we get to see, hey, what are some recent, right, purchases and so forth. So we can see here we have Blackstone on March the 1st, and we also have Evitine Healthcare March the 1st, which ended up actually going real heavy. You can see they have a total right here of 2.2 million, almost 2.3 million, I must say. Let's see if we can see some familiar names. So you can see this is March. This is what February's been looking like. Jane Street Capital looks like, hey, you know what? They closed their positions on it. Keep scrolling down. We also have Morgan Stanley on the list over here. Let's take a look, keep going down. We have Citadel as well. As we keep going down further, let's see if we see any familiar names. Royal Bank, which is very big over here in Canada, one of the top banks. We also have, let's keep going. We also have Goldman Sachs, one of the big banks. Bank of Montreal, big over here in Canada. And this is also taken into consideration. This is February. We have Barclays. We have Citigroup. So again, as you can see, there's a lot of interest. Like there's a ton of interest for APTO. And then you could see from like January 20th and before, we have a lot of closed positions here. But for the most part, we can see a lot of institutions have shown a lot of interest. And that's something to pay attention to in regards to where the big money's at and how bullish they actually are on APTO. So like I was telling you guys before, I have a position in DARE. And we're going to be taking a look quickly at the 3-month, 1-day chart. So as you can see, I ended up getting to a high here around $3.85. And where I built out my position, literally, when I first started building out my position, it was actually at $3. So I was in there a little bit high. But I've definitely averaged down to where I'm around, like I think I'm around that $2.20, yeah, around $2.20 area. Hey, I'm still above, but hey, at least I know the stock currently right now is at $1.93. Let's just call it that. So am I going to be adding more? Most likely, but I'm only going to be looking to add more on the dips. But just to kind of show you guys very quickly here, it did a very, very good job all the way from December. You can see the 21-day EMA right now. It did a good job being above on that trend and holding it down for a bit. But as we know, the market started going through a transition. So let's kind of open it up a little bit. We're going to do the 5-day, 5-minute, something more recent. All right, so as we take a look here, on February the 22nd, we had the price here of the high was $2.28. And then after it started coming down here on February the 24th, getting down to $2.10. And then here you can see, which is very notable, all the way from February to 26, going all the way here to March the 3rd, having this resistance area of $2.05, which is definitely an area that I'm looking forward to actually break through so we can start making some moves to the upside. But what we see here is $2.18 where it ended up spiking up on pretty much March the 4th, which was yesterday. And I'm actually going to go into details about why that occurred. Let me just switch up the chart here. So what pretty much happened on this time, which is very ironic, and I have a feeling it has to do with the article that was released that mentioned there. I think the article, it came out around the 10 o'clock hour. I think it was around 10:48, 10:30. Could have came out earlier. And then also more news. it ended up spiking all the way up to $2.18. And I remember this because this is like probably, I think it was one of two stocks that were on my entire watch list that were green. But of course, it ended up giving back some of those gains. As you can see right here, it ended up getting back down to the low of $1.84. Like I said, these are still not that bad of areas to actually take a look at. It ended up breaking these support levels, but as you can see right here from 2 o'clock yesterday, it did a fairly good job. Even going into, we see the pre-market today, it did drop a little bit, recovered very quickly, still staying above that $1.85, and that's what I really like to see. But as we look at today, we already know it was a very, very rough day. We had a huge dip. Many stocks dipped in the morning. You can see the price here at around $1.60. So when you see something like this, this is the place to add, because you look at the RSI, literally like around it's like around $17 and so forth. So we can see that's a solid support at $1.62, and then moving up to the next support level here of $1.66, and it's been running up so far. As we can see right now, the time is 3 o'clock, so just an hour before close, where it's sitting at $1.78. Still hasn't tested above the $1.80, but who knows, that might change after this recording is over. But if we see it end up starting to reclaim and start riding above using that momentum and so forth, that'll be something to look out for. But we also got to take into consideration, let me just switch it over. So also what we need to take a look at here, you can see it here, it was at $1.64, and it's ended up running all the way up here to $1.94. So there's definitely some momentum going on. Doing a great job staying above that 21 EMA, just riding that trend perfectly. Like look at that nice move, just riding along the line there. Staying very, very consistent, a little bit, but staying very consistent for the most part and staying above it at $1.93. I'll be very curious to see if it does continue to do this. We already know what the analyst price targets are, so to be honest with you, you really can't go wrong. But all these dips that we have seen, let me just make it a bit smaller for you guys. Let's go back to how we had it. Is that if you end up seeing around $1.62 and you're interested, this is not a bad place to add. If you end up seeing $1.66, this is not a bad place to add either. Also taking a look at this area around $1.76, not a bad area as well. And also at $1.80. So this particular area is not bad, especially if it ends up pulling back. But like I always say, make sure you spread out your position. Just don't put one large whole lump sum all in at once. You want to divide it up so you can take advantage of any fluctuations that may happen in price and whatever time frame you choose. I am seeing some support here, a little bit here at 185. This has been proven in the past as well. Just to kind of show you guys on the 5-day, 5-minute. So yeah, we could see this particular area, like it's definitely one of the support areas. So you really can't go wrong. Like I said, this is a penny stock at the end of the day with an upside, a tremendous amount of upside. So take advantage of all these sales that are going on, because like I said, when I first initially got into there, like my average cost is like $3 and I brought it down to $2.20. So I look forward to see what's going to happen. And if I end up catching this 160, I was unable to catch it. I was away from my computer. I would definitely be looking to add. All right, so we're going to be jumping into doing the technical analysis quickly on APTO, Aptose. This was the second penny stock that was mentioned in the article. We could see here, ended up getting to a high of $4.20 on March the 3rd. But one thing that we want to take a look at the 3-month 1-day chart very quickly. So just like any other stock, there's been a big time downtrend that we can see with the correction in the market for a little while. You can see from the beginning of December all the way up to about March and so forth. It did a great job staying above the 21-day EMA, but ended up breaking this pattern, as you can see, even falling right through the 100-day simple moving average as well. But ended up having a strong move, getting back above the 21-day EMA. And we can see there's some solid resistance level here, right at let's call that $8.54, because even when it was at $9.25, it only stayed there. It looks like for about a couple days and so forth. So, but as far as the resistance area, for what I'm seeing is $8.55 being the most recent in regards to, hey, where we need it to pass. Why is this even important? Because if we end up passing these particular areas, especially this 851, or we have a very high likelihood of passing 925 very quickly. So the next thing that I want to show you guys quickly is the most recent action that we've seen, and we're going to take a look at the 5-day 5-minute. So we saw here, like before, it was $4.20 where it's a high on March 3rd, and it's pretty much been going on a downward trend. And if we open it out and take a look at even what it was looking like, let me just switch this over here. We take a look at what was going on yesterday. Ended up dipping down at $3.75 and then having a lower dip as the day progressed down here to $3.62. But then we ended up building up another level of support as we started going in to the close as well, which is something that you really want to look forward to. You can see there was a ton of movement here to the upside. This is another way to realize and see that, you know what, this stock is at a very cheap price because people are just loading the boat. So we have a lot of buying going on, but of course that open, like many other stocks, it got dumped very hard. We could see here the high was around $3.95, right? And this was literally around $9.25. It ended up getting down to $3.39 here at $11.25 at the low. If you were thinking about adding, this would have been a great place to actually consider. But we also see that, you know what, the support level has gone up. So we see there's some support here, which has been tested on multiple occasions here at $3.47. So that's an area where you might think about, hey, I might think about adding there if you wanted to consider that. Another area that we're seeing right here is around $3.55. So seeing where it is right now, currently at $3.62, or you call that $3.63, this is also fair as well. As we can see, we've already seen what the past history looks like, and we know the market is down overall in general. But if you're cheap like myself, then definitely look for areas in regards to 348 and around 340. And if you can get them below that, even better. And like I always say when it comes to my strategy, dollar cost average your way in. Just don't put one huge lump sum. Because again, with the volatility and how things are going in the market right now, if it goes down even lower, you want to be able to take advantage of that. All right. So it clearly sees right now it's around 307. I'm not too sure whether, I don't even know what's going to happen at 4 o'clock, to be honest with you guys. But it definitely looks like we have a resistance area here. And you notice it all the way from over here is around $3.66. So if it ends up breaking this area, definitely can make a move to 370. We see 370 and 375 would be the next area. And if we end up getting past 375 and the interest is there, we could definitely get to 386. And anything above that, we revisit 395. That's if everything, assuming everything goes to the upside. I'm not seeing that, to be personally honest with you. There might be a sell-off towards the end. This is a Friday, right? And it's already 308 towards the end of the day. But I say a fair area to actually look if you're thinking about adding is around 350, 340 to 330s. And if you can get them below, even better. So as you can see, there's a lot of upside and potential in these two stocks. I'm probably just going to be focusing on there because I already have a position there. And hey, if the market continues to be as volatile as it is, I'm going to see if I can get my cost average down. But besides that, both of these two stocks, they're actually really good and I like them. But also at the same time, you got to understand that we can't own every stock that is out there. But I know one of these is for sure that I'm very, very bullish on. You guys can let me know inside the comments which one that you're bullish on. And also want to put in the disclaimer, I'm not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. Also remember, considering how volatile that the markets are right now, please make sure that you're using a dollar cost averaging approach. When you get into a position, just don't focus in throwing in an entire whole large lump sum and just leaving it. No, you want to make sure you're getting the best price at the best possible times while averaging it out to make sure that, you know what, you have a good cost basis and it ends up looking even better, especially as the market recovers. Hope you found that helpful.